Hello traders, Gary Wagner here just before noon in Honolulu, 5 o'clock in New York. It is Tuesday, November the 12th, 2019, and this is the Daily Report for Gold and Silver. We got mixed messages from President Trump today as he spoke to the Economic Club of New York, and this in regards to the trade war that is currently about 18 months long between the United States and China. On one hand, he said that they're very, very close to coming to an agreement on phase one of the trade talks, the trade agreements. He said just a little while after that, that if China doesn't comply or doesn't agree with this, he is ready to hike tariffs back to a new level and also to put on new tariffs come December 15th. This had a gyrating effect on gold, which actually traded to a low this morning of 1446. That is the number that the Fibonacci retracement identified yesterday. We'll talk about that in detail when we look at our technical studies. But first, let's take a look at current pricing. We are looking at gold after the break and into Australia, currently showing a net change of about 10 cents at 1457.20. However, in New York today, it traded and closed right around 1459. Obviously, when they fixed the price, they brought it down a couple of dollars. But what is most interesting today, and we will discuss in detail when we look at some studies, is the low of the day, which came in at 1446.20. And if you recall, we identified a retracement area, the 0.23% retracement at 1446. More on that when we look at our charts. Silver is currently trading lower, and in terms of the fixed price, it is at $16.74. Palladium, however, did gain about $10 today at $1666.80, and platinum lost about a full percent and is currently at $871.40. That all in light of a moderately higher U.S. dollar. Let's take a look at our technical studies. We are looking at a static chart, meaning it was the chart I took yesterday. It was submitted for our Kitco opening letter as well as what we used predominantly on the show. And it is a weekly chart. And what we pointed out was, in terms of the current close of the market, we were approximately $11 away from an identified potential bottom, and that bottom was based as a 0.23% Fibonacci retracement, and that level comes in at 1446.10. Oddly enough, today's low was 1446.20, I believe. We'll see that when we pull up our live charts. But what you will notice is when you look at the bottom of this weekly chart, we actually came to that price point exactly and then bounced off of it, closing substantially higher off of that low. So we are now looking at the live chart. This, of course, from eSignal. When we take a look at the weekly candle and realize it is only Tuesday and it is going to change from what we're looking at now and yesterday to what we'll see on Friday. But what is clear and evident on this weekly chart, of course, is that now we have a low that matches exactly that Fibonacci retracement level by 10 cents, and I will call that fairly precise. We talked about the fact that the reason I believe that these numbers have such strong validity was especially when we looked at the 0.38 level and saw how that so eloquently defined a really ceiling in the market that was evident for about 3 years at 1370. When it broke above that, that's right here, we saw a substantial move that week. The same is true for the weeks when it broke above the 0.23 level. Now, we have seen effectively that it bounced off of that price point, and now we have to await to see if we get any kind of real momentum building and upside action, or whether it will form a base or actually consolidate and trade lower. In other words, it is the first step to identifying a potential support level and higher pricing, but it is certainly not all of the things that we need to look at before we can confirm with some level of certainty that that is in fact the case. As you can see, we have converted our weekly chart into a daily chart, and of course the area that we want to focus on is this line down here, the 0.23% retracement level. And by using their playback feature, we're going to go back in time, so to speak, and look to see how the market climbed above $1,500 per ounce and then dropped precariously as it drifted towards current pricing. What we're looking at now is yesterday's candle, and this is today's candle, and you can see how perfectly it touched on this particular price point. But as we said, we now need to see if we'll get technical confirmation with a candlestick pattern and our Elliott wave count all pointing to a potential bottom before we actually make a move. But we have the first indicator that we have potential support at this price point. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.